Hello, good evening, ladies and gentlemen. My name is Dr. Ayodele of Startup Call, and I am here with my friend, Amotaya El Nathan. Um,
Hello.
Go ahead, Tayo. Say hello to everybody.
Hello, everybody.
Great.
Hi, Mo. Hi, Kersha.
Fantastic. So, we counted an opportunity to come into your homes again, once again, have you share the evening with us. As you may be aware, and if not, here I am giving you the spiel once again. This is webinar number 4 in a series of 6 webinars in the Way Out of Rat Race project. This project is brought to you by Startup Court in collaboration with the Africa Center and Calgary Foundation. The essence of this project is to share information on financial literacy with members of the community. The goal is that the more people hear, the more they take action, and the better the future is for us as a people and as a country. Our goal simply is to educate, inform, and support implementation of these ideas. Over the last 2 weeks, this is our third week at it, we've been sharing these thoughts. Our first meeting was on a Thursday, about 2 Thursdays ago, and we spoke generally about financial literacy. And I had my friends, Claudia and Andrea from Pramerica with us, and we just spoke generally about financial literacy and the concept of when you are, will I say, in financial devastation, in debt, unable to pay your bills, struggling with more month left than money, and then moving from that to a state of financial wellness where you are fairly comfortable, you can pay your bills into the foreseeable future, and you're fairly independent. And then proceeding from that to a state of financial freedom, which is where you are no longer using your time to make money, but you have been able to, over the years, create assets that generate sufficient cash flow to pay your bills and pay for your lifestyle, and you've built a measure of comfort around that. It's been an interesting set of conversations. The second one, we spoke about assets. That was this time last week. Ty and I spoke in detail about what we have as assets. Now, we're not necessarily talking about the cash in the bank or the car that you have in your garage or the house you live in, but our focus is on your skills, your competencies, your capabilities. The saying goes that your network is your net worth. So the concepts we shared were around using what you have to be able to generate the income that you need to pay for the lifestyle that you desire. And being able to build a plan seemed to be a recurring decimal in all of these conversations. On Thursday last week, we spoke about the B word: budgets, constraint or freedom. And the final conclusion at the end of the day was that as long as you have a plan, your initial constraint is part of the process that takes you to freedom. If you are not constrained, that means that you have started on a very level, at a very nice time. So you don't have too many bills. You started early in life to build the wealth that takes you to freedom. However, if you are picking up the ball sometime in your 30s or your 40s, and you have student loans, and probably maybe you have a mortgage and a car loan and some consumer credit, that means you're in a bit of a hole. And then you first need to constrain yourself into your earnings and then use your earnings to pay the expenses you have. Probably seek the opportunity to grow your earnings so that you can pay down your debt, pay your bills, and then begin to save some money on the way towards financial wellness and maybe even financial freedom. So, in a nutshell, over the last 5 minutes, that's pretty much what we have discussed in detail. At this time, this evening, our focus is going to be on banking. Now, I am a CPA, as you know. Dr. Ayodele is my name, and my colleague, Omotaya El Nathan, is also a CPA. We are not bankers. So clearly, you know that this is not about a professional banker's perspective. We will be speaking as consumers, and we'll be sharing our thoughts and experiences. And our ask of you is that you use the chat box to share with us what you know and are aware of as well. That will help spice up the conversation. So, Tayo,
Yes.
banking. Tell us what you know about banking.
Oh, what I know about banking. So, before we start, welcome everybody. Thank you for having me. Kersha is also here, and she's also a CPA CMA. Hi, Kersha. So feel free to jump in anytime you want to, Kersha. Walk you through in the past, like the work you do. I appreciate your presence here quite a bit. I know you can hear me. Um, so banking, what do I know about banking? So I know everybody, and most people here have bank accounts, right? So even though there are times when I debate greatly if I should just take all my money out and put it in my piggy bank, because sometimes I don't know, the reception I get from my bankers or from the bank generally, I just kind of chalk that up to the fact that maybe there's not a lot of money in the bank account, so they don't respect me enough. Like if there was a lot of money there, there might be a bit more respect, but we'll talk about that later. So, what do I know about banking? I know there are five major banks here in Canada, and I know that the banks here are fee dependent. Maybe that's where I want to start. They are fee dependent. So you bounce a check, they take $48. And I'm like, if I bounced the check, why would you take $48? There was not enough money in the account. That is why the check bounced. And then you charge me $48 again, and you're supposed to be on my side, right? Or you want to do what's that one called? Money order,
Draft.
bank draft, and they charge you $7. And you're like, why? Once again, there's not enough money there. And then of course there's the $16. Ooh, my biggest one is where they say you can only do 10 transactions, or any other transaction is like $100 over or something like that. So the banks in Canada, yeah, I find they're very fee dependent. They thrive on your fees. So as a consumer, I have been constrained to be sensible about how I use my debit card, because I don't want to be charged $48, or if I go overdraft fees or any other I don't know, a basket of fees that the Canadian bank have coined up to collect the money that is not enough in the first instance. So that's where I'm starting from today, bank fees. And feel free to put in the chat here your experiences with banking and all that. And so I guess it's important that we know this, right? That sometimes you don't pay attention to the fees. So one of another fee that they charge is if you have a checking account, if you have a savings account, and there's money not in if the checking and the savings are linked, and if you run out of money in the checking and they help you transfer money from the savings to the checking, they charge you $5. That happens at the bank I use. They charge you $5 just to move money, back and forth. And this, you might think, oh, this is small, or this is not important.
It's $5. What's $5, right?
What's $5? It adds up. It really does add up. And so what I realize is everybody has an account officer. Everybody has a banking officer, an account officer. That's what I like about Canadian banks, is they give you an account officer. The question I have for you is, what is your relationship with your account officer? Does he know you by name? Does he like you? Do you have his direct number? Do you speak to him? Do you pray for him? Do you buy him coffee once in a while? Because
why would I do that? The account officer, he gets paid to do his job.
He has your money. He's in charge of your money. Even though, I'm just thinking I don't know. I think it's important that you have a good relationship with your account officer, because
when you come to that, sorry to cut you short, when you come to that account officer part, right, and the fact that they have your money, the fact is they're aware of information that can save you money.
I was coming there.
Fantastic. Maybe I should let you keep going.
No, I was just saying. So I find that the first place to start is having a good relationship with your account officer, and I'll tell you why this is important. When I was applying for a mortgage, a while back, I tried and I went to different banks. You go into the bank corner and you say, I like a mortgage. First one they ask, oh, yeah, I'll give you a mortgage. And they say, okay, give me your bank card. I'm like, oh, I don't bank here, but I saw your rates. And they're like, no, we need to have you in our system. And then we need to have our own internal rating on you before even the regular credit rating. So, so I'm like, so I can't get a mortgage. They're like, yeah, you can, but and so that was for me. That was my experience. Everybody has a different experience. People go through brokers and get mortgages, but just walking into a bank, right? So then I went to the other bank, and they're like, yeah. But once again, why don't you bank? I'm like, I'll move all my accounts here. Just give me the mortgage. Like, well, your account is too fresh. We don't know you. We don't trust you. Kind of, sort of. So at the end of the day, of course, they didn't give me the mortgage in the bank. And if I enter into the bank where I had an account officer, like, yeah, I will work with you. And then the experience I had with that account officer, being my account officer who's seen my history, my direct deposit goes in this bank, they know me, they're able to say, well, information, right? So they give me all this information that can help me, save me money. And that was a much better experience. And I realized that these banks thrive on a relationship. They thrive on a relationship.
That's correct. So
If you want to
basically,
have,
knowing your account officer and having a relationship could save you some money. From time to time, I'm aware that they have the opportunity to either move the type of account that you use, which could lead to savings, or because, for example, like you said, you have a mortgage. So you have a savings account, you have a checking account, you have a credit card, you have a mortgage. They suddenly say, hey, you know what? You have all these products with us. We are making so much money on you. We are going to give you some of that money back by allowing you to start to use your checking account for free. Or they could say, oh, we no longer charge you for drafts because you have a 400,000, $500,000 mortgage with us, and you are paying some good interest on that. So we'll take that over charging you $5 a month or $7 every time you come in to do a draft. So those are some of the things that I have seen happen, and they would come typically out of an awareness of your account officer and them trying to strengthen that relationship with you. Yeah.
Very important to have a good relationship with your
Quick
account officer.
question: why don't people use banks? There are people that they're like, this whole banking thing, just leave me out of it. I'd rather keep my money under my pillow at home or under the tree on my farm. Why is that the case? Particularly from our community.
Oh, well, there's a bit of a distrust with, the bank, I find, in our community, because because one, from time, a lot of people in our community they've not been explained, or they don't understand how the banking here works. They don't understand why you're being charged all these fees, for example, or they don't understand why you pay your paycheck into an account and they hold your check for 7 days or 14
Like, they don't know you need to pay rent.
They don't
or that
that
NMAX is due.
Or NMAX is due, so some of this, nobody has actually had time to explain it to most people who are not from this system, who are new here. And so a lot of people get burnt and they learn it the hard way. Like, I remember my first experience in paying rent. Rent was due on the first of the month. The bank I was with, I'm not going to mention the name, closed at 3:30, opened at 10 a.m. Some of you might know this bank. So how do you open at 10 a.m. and close at 3, and I have to go to work? So I'm literally racing down, right, to get the banker's draft so that I can pay, so that for the rent charges me $25, landlord charges me $25 extra. Eventually I have to close that account down. That didn't work for me. Right, because it wasn't feasible, it wasn't fair. Then I go to this other bank who's open from 10 a.m. or 9 a.m. to 7 p.m. And I've been there ever since. So some of you might also know this bank. So the point is, people don't like the banks because of this weird experiences. And then you go into the bank and you meet customer service people who don't, first of all, maybe even understand your accent, who don't understand what you're dealing with, and then they're asking you all those questions and then they're going to hold your money. Like, why are you holding my money? I'm just going to go to the, what's that check cashing place and cash my check and hold my cash. right, and pay $5 or $10 to cash the check and just hold it because they don't feel safe or valued or trust. There's no trust, in the banking system for people who are new. Plus, then the interest rate sometimes, like Claudia and Claudia was saying, was it Claudia that was saying that
Yep.
the interest rate is, even if you put your money in the savings account, is less than
Oh,
inflation.
let's not go there.
I'm
Interest
just
rates on
saying, you,
savings
you
accounts
ask
are
the
like
question why
less
people
than
don't
1%.
less than, people, you ask the question why people don't trust the banks. I'm telling you, from in our community, this has been it. Or like when you're doing taxes and the bank says, yeah, open an RRSP account, and then they open an RRSP account for you, and they come tax that you've over contributed. Now you are being CRA is penalizing you for over contributing into your RRSP that the bank should have told you, that they should have told you. Somebody's giving us a comment here. Could people find the banks unfair because sometimes they don't approve the business loan you need? Absolutely. I agree.
That's a very common one, actually.
That's a common one. They tell you to go bring your mother's left kidney, and then you get them your mother's left kidney, and then they're like, yeah, we just don't think this is a good time. That I come across a lot. Oh, Kresha has a question. She's raising up her hand. Kresha, go right ahead.
Okay, good evening, everyone. I'm excited to hear this conversation, and I just wanted to comment on a few things Taya said first. So one of the first things you mentioned, the bank fees. So I just want to remind everyone, and I'm not pro bank or against bank. It's not about that, right? The reality is that a bank is a business. Walmart is a business. The vehicle dealer, everything's just a business. If not for profits, they have to make profit to survive. So when we talk about the fees, when you give your money to the bank, whether it's to, your check is going there, they're doing your payments, automatic payment for your mortgage, rent, whatever. Who is doing that for you? Someone is doing that. So they have to pay their workers. They have some automation set up. So yes, they have to pay for that system. So the banks are not going to do anything for free because from their end, it is a business. So they have to ensure they are covered. If somebody goes into your account, they have to be able to repay that money if there's fraud. So let's remember that it's a business. When you think about, you have to go to a surgery, why is it costing so much? Because you have to pay for the water, the surgery, all that. So let's remember that it's a business. The other thing I want to read, the other point is that let us remember too that it all goes back to education. I'm so excited that we're having this series. There are banks where you might not have to pay a fee. And you mentioned about the mortgage. There are banks right now where you can go and get a mortgage from them without having an account there. There are banks who have programs to support immigrants. Because to be honest, when you come to Canada, it's a whole different system. Some persons are not aware of the terms, all the things. So there are banks that do have specialized programs, educational programs to support immigrants. So it all goes back to education. And the other point I'll just quickly make is on the trust. When you think about it, why do you prefer to go to one doctor over the next? Or you prefer to purchase your takeout food at, I don't know, the food places? Probably
Popeyes
Kentucky
versus
versus Burger
McDonald's.
King. Exactly, because it's trust. Some persons will never go to Walmart. They'll never go to Superstore. So yes, so you made a very important point. We need to have that relationship with our bankers, because sometimes, to be honest, they're not going to ask, they're not going to think about something. You might just have to say, what about this? It's just like with your doctor. You might say, what about this? Have you considered this? So building that relationship is very, very, very important. Thanks.
Thank you, Kresha. I appreciate that, and I agree with you. The bank is a business, right? And like all savvy consumers and business owners, we know how to do the research to get the best deal. So, with that said, it is in your interest to get the best deal on your bank, which leads me to the point about there are banks now who don't charge fees, right? Which Kresha mentioned, and that's how we're going to get there. But the point I'm making is, financial literacy is key. Nobody's going to do the work or the research for you. You need to ask the question. Ask the question. One of the things that has happened to me over time is you go to a place and you say, can I ask you a question? I grew up in a community where you don't ask questions. If you ask questions to a leader, to an older person, they look at you as rude. And so that was always a big deal. Like, why are you questioning my authority? But then you come here, you realize if you don't ask, you're gonna hurt yourself. So ask the question. It might sound dumb, it might sound weird, it might sound uninformed, uneducated, but guess what? You've learned something new. So yes, please, which banks don't charge fees? Okay,
I know a couple.
okay.
Most of the online banks, Tangerine, Simply,
PC
um,
Financial.
PC Financial, most of those guys are no fee banks. Taiwo will come to you shortly. We just want to go over this and then I'll say a few things that will come to you. I can see your hand is up and I don't want you to put it down yet.
That will
So
say FCAC.
yeah, we'll get to FCAC. So the online banks predominantly do not charge fees. They will let you do your banking. They do not have branches. They have customer service that's on the phone or on the internet, and that's how you do your banking. And if if it gets really difficult, then you walk into a superstore for PC or Tangerine. I think Tangerine has probably ATMs or something like that. But most of these online banks have no physical presence, and that's why people are scared of them. Now, I want to just mention a few things. Number one,
Sorry, Doctor, sorry to interrupt you. They have no physical presence, but they are affiliated with one of the big five, right? So Tangerine, I think, is Scotia.
Tangerine is Scotia Bank. That much I know.
Yeah, and then Simply, they changed their name. I think Simply is CIBC. And then, of course, PC Financial, you walk into a superstore. So the point is, even though it's online, you can go to a physical store, a physical bank, and have a conversation with the person. So don't be scared. They are good banks.
So thanks for taking away the fear. I wasn't going to move that fear factor. Taiwo, we'll come back to you. Now, no fees depend on the type of account, also the amount of money in the account. That's definitely correct. I just wanted to highlight a few things. Number one, if you have money in the bank, the Canadian Deposit Insurance Corporation insures only up to a maximum of $100,000. So if you have more than $100,000 in the bank and the bank fails, you're getting $100,000 at best, under the best circumstances. That's just an FYI. When last have we had a bank failure in Canada? It's been a while. We haven't had those kind of problems around here.
That happens in the US.
US and back in the day in Nigeria. Now, in terms of banks, we've talked about the online banks. You have the commercial banks, the big five, RBC, Scotia, TD Bank, CIBC, and Bank of Montreal. Those are the big five banks. Those are the guys that hold the Financial Services Institution of Canada in place. And everybody in financial services is tied to those guys in one way or the other, whether they are vendors, customers, brand names attached, whatever. Those guys are like the bedrock. Of course, the only foundation that is bigger than those guys is the Bank of Canada. But those guys are like the bedrock of the financial services system. Now you have the Bank of Canada, which is one of the many government-owned banks. Other government-owned banks include BDC, the Business Development Bank of Canada, EDC, the Export Development Bank of Canada, a bank like ATB, Alberta Treasury Branches, which is actually a subset of the Ministry of Finance, is effectively Bank of Alberta. Most of the other some of the other provinces, I know the provinces out in the prairies, Manitoba and Saskatchewan. I think Manitoba is the one that has more capacity on the insurance side rather than the banking side. But as much as possible, that the government-owned banks, there are credit unions, of which First Calgary used to be First Calgary, now called First Connect, is one. And there are different sizes and shapes of credit unions. Some of them are found one office, one location. Some of them are multi-location across provinces. Those exist. And then, of course, there are the finance companies. Finance companies range from just making small loans to small business bankers and individuals, to organizations as big as First National Mortgage, which is a mortgage bank out of Ontario that does business nationally. So that's just general information that I wanted to put out there. Taiwo, you've been putting up your hand since. Go ahead.
Hi, Dr. The host and also the speaker. I'm trying to get the name. I can like join late, but it's always a good thing to be on this platform. with Dr. Bamishaye. We go way back in the last 4 or 5 years almost. But like, thanks for putting this up to the general public. I appreciate that. And
Thank you.
I'm looking for that invite one of these days. We've been speaking about it, but we'll see to that. But back to my question. I work in the FI, in the financial industry, and also like just what the speaker had said regarding relationship management. Like you have to come in from that angle. That's why you see most banks are transitioning from account managers to relationship managers, because it's all about the relationship. How you build that relationship, how you grow it, and now you get those possible referrals from those relationships that you started and that you see them blossom into great things. So I'll just pick on the fee part of things, because that's how I get paid, if I can put it that way. So like it just depends on your value proposition. Like how do you position that to the client, and how do you deliver those value proposition? So like if like you said, you can always negotiate these fees. It's not cast on stone. Like, okay, yeah, there's some that you have to say, okay, you must pay, you must do X numbers of transactions on an account. And that's where we have those annual reviews, whereby we'll be like, oh, this is what you've done for the last 12 calendar months. This is what you can do in terms of if you want to save fees, let's move you to a lower cater. So that does happen. And we're in need for the customers. So however we can help them save fees. I work with a set of people that are like, okay, very fee sensitive. So like it's one of those things you have to put in place, and that's where your value proposition comes into play. How do you deliver it, and how do you let them know that these are the reasons, or this is the reason why you're charging those fees? At the end of the day, she had mentioned you go to a medical doctor or a dentist, for example, they'll have all those lists of things you need to do, and you have no choice. You have to pay for those services. You don't negotiate with them. So let's look at it from that angle as well. I'm not saying if you can cut down the fees you pay monthly or yearly, because it adds up at the end of the day, so be it. And banks have put things in place that you can as well speak up, like you said, ask those questions. If you don't ask, you won't get answers to them. So there's always a room to negotiate. And thank you very much. Thank you for giving me this platform. Appreciate it.
You're welcome. Taiwo, thanks a lot for making that contribution. Taiwo is let me say Taiwo is a friend and brother in this space. We've shared the platform more than once on talking about banking and services to whether business clients or individual clients. I actually didn't realize he was the one until he started speaking. So Taiwo, thanks for that. I really appreciate it. Moving along, I want to talk about account types. We all know checking account. The first account any bank will open for you is a checking account, because that's one clear way to get your money, fees, right? A savings account, well, they're supposed to pay you money for opening that, but they'll pay you 0.1%, which is less than, let me see, inflation is currently 8% now. That means inflation is 80 times. Am I right? Yes, 8 versus 0.1. 80 times what you get on a savings account right now. So think about putting your money in a savings account. Think about it more than once. Credit cards is unsecured lending. That's just borrowing, and the bank would charge you interest. Now the interest on credit cards start from, if you have very good credit and the account officer likes you and they're able to cut you a very good deal, you're able to get somewhere between 15 and 19%. If you have bad credit and you've finally been able to get one, finally, I can tell you that your interest rate is 29.99. So the best thing to do with a credit card is use it paid, because the longer you carry that balance, the more you are going to pay in interest charges, apart from the annual fee on the credit card. You could have overdraft protection on a checking account, which means that, like Taiwo was saying about when she'd have to run to the bank literally to pay in her check so that the landlord does not charge her more money. Overdraft protection would have saved her if she had overdraft protection. That means the bank would be able to charge her more than her account balance to a certain limit. whether it's $500 or $1,000 or 1,500, they'll be able to charge her that excess because she needs that for that very short while. But of course, when you use overdraft protection, you get charged the fee immediately. So it's all about the fees. That's what it comes to. Now, also in addition to that, you have, like we've talked about mortgages. So you have a mortgage with a bank. Tied to the mortgage, you could have a home equity line of credit, or you can have an unsecured line of credit, whether it's personal or business related, as the case may be. So those are all possibilities. However, there are account features that worry people, and Tyler mentioned one of them earlier. Has anybody experienced a situation where you pay money in the bank and suddenly the money is there, but it's not there? If you can raise your hand, I'll see all the hands raised. The money is there, but it's not there. The money is there, but you can't access it. Right? Those are called account holds. Now, that's basically the bank holding on to your money for like 4, 5, at times 7 business days to trade with it. Right? That's just their own way of making money. That drives me crazy personally, but hey, it's part of the process. I want to put my money in the bank. I want my money to be safe.
Can I say something?
Go ahead,
If
Tyler.
you go deposit your money in the bank, so they will hold a check as opposed to like a direct deposit. That's basic knowledge. But if you go in there, you meet your account officer. There have been times when I've been able to speak to my manager, the account officer, and say, please don't hold this check. And they've agreed to not hold in the check. But if you just went to a teller, they would have held it for 7 days, because so when they know you, and they know who you are, and they know that you're good for your word, and they put a face to the name, it's easier to say, no, don't hold this check. That has happened to me a number of times. Back to the fees. The reason why I harped on the fees is from the consumer side, not from the banking side. We are here for the people, right? So, because I know a couple of financial people who work in the financial industry, they say, I'm not coming after your income. I'm just saying, as a consumer, if I go to Walmart and I see chicken 1 for $12.99 and I see chicken 2 for $2.99, if it's not expired, I probably buy the cheaper one, right? That's why I'll go to Walmart maybe instead of say Sobeys, because I get to compare and I get to save money, right? So I'm not coming after the banks because of they gotta do business, but it's also in my own interest and my own rights to find what works for me. So I do apologize if I've stepped on anybody's toes with regards to the fees, but I'm coming from the consumer side of the fact that I've had to pay $48 too many times to my bank, right? When there was no money there in the first instance. I'm like, why would you take $48? Give me one chance, help the sister out. If this were easy, I wouldn't have to be here. And sometimes I call them and I win, and they'll say, sure, we'll take it out we'll give you this one-time courtesy. And that time they say, we'll split it into 2. So we'll pay 24, you take 24. And that works too, we have a relationship. We're gonna get good at this thing eventually. So that's my my point.
So Tayo, we're talking about comparing chicken at Walmart, right?
Yes.
So do you want to talk about FCAC? I just put the link to FCAC in the chat. Everybody, you can click on that link. It's a very interesting thing that we found.
Yes.
Go ahead, Tayo.
So FCAC is this government of Canada tool that allows you to compare. It allows you to do a lot of things. It's actually a place for financial literacy. So if you open up the site and there's a lot of information, much more than comparing bank accounts. But if you clicked on the banking link on it and then you clicked on the bank account comparison tool, it's really cool. I find it totally cool. You can click on it and then you can put, so the first thing you do is actually to click on your the province you are in. So Alberta, for example, what kind of account are you looking for? And it says check-in. And what kind of currency are you looking for? Canadian or USD or order, and then it says there's an option number 4 is optional. What do you want to do? Senior, GIS, RDSP, youth, student, or newcomer. Say I click newcomer or student, for example, and you click search. So it searches for you what bank accounts are out there that will charge you 0 monthly fees. So for example, this one is saying the student account, Canadian Western Bank, has a 0 monthly fee after the student discount, unlimited combined transactions, Canadian dollars. There's another account, the Prestige account, the CWB, student account at First Nations Bank of Canada, 0 monthly fee. So it tells you where it's able to let you compare the bank accounts for your stage in life. I find that very cool. So I think if you're looking for more information, this is where you can get more information on the kind of bank accounts you're opening, even not just for you, but if you have children coming to age, right, who you need to open bank account for, right? You might already have a bank account, but you might have a brother, a sister, children, teenagers who are starting into the workforce. They're looking for accounts and they don't need to pay fees with their bank. So so this is a really cool tool. I think we should all explore it and get more information. It's just nice, easy reading right before you go to bed at night. It puts you right to bed.
Fantastic. Tara, thank you for sharing that. Now, in talking about banking, really, the focus is to be able to highlight the opportunities to save that exist. Now, when I say save, I mean saving on the cost of banking, which is fees, and then also building a culture of saving money, putting money away for the future. Now, whether that is for the rainy day or for debt repayment or to purchase an asset that helps you buy back your time in future, the point is there is something you want to achieve, right? So it's key for us to say at the beginning when you're opening that account, what exactly is my goal? What am I trying to achieve? Like that tool was pointing out, if you don't have a goal, then you're just going to compare all sorts of bank accounts. But if your goal is, I want to bank for free, then you're going to put in that filter, no fee banking, and that's that. And then that's what you'll be looking at. If, however, what you're trying to do is build wealth long term, then you're looking for high interest returns in the financial system, then it will give you the results that will give you that opportunity. So I think the point I'm making to you tonight is this is the 4th webinar. And if you notice, every single time at some point in the seminar, we've talked about the need to have a plan. It is critical. You don't get out of debt without a plan. You don't achieve financial freedom without a plan. You don't get to a point where we can say you can pay your bills month on month into the foreseeable future unless there is a plan in place, right? So if you just spend as you earn, then financial wellness will stay away from you because most likely you will spend more than you earn. We all just do it. The natural propensity that we have is to spend more money that we earn. Expenses will always catch up to the income. So the only time you're able to keep expenses at bay is if you have a plan and put that plan in place and you enforce that plan such that there is more money than month left, month after month after month. In addition to this, it's important to having a plan. You don't have just one goal. You have a number of things on that plan. Oh, yes, I want to pay down my mortgage. Oh, I want to pay off my car. I want to save money for my children's college. I want to save for retirement. I want to save for my business that I'm going to start 5 years from now. Having all these little buckets helps you to focus on small wins, small goals, and big goals. The small goals facilitate the small wins that allow you to celebrate now. So you want to be able to say, okay, I have a $2,000 credit card I want to pay off. How many months do I need to pay that off? Plan for it, implement that plan. Small win in place, happy camper. Yay, I got it done. Then I want to pay down my mortgage. Fantastic. So what's the plan for that? I'm going to double up every year. Every time I get my bonus is going to go to my mortgage. Boom. That way you consistently do that. Your 30-year mortgage could be done in 15 or 20 or maybe even 7.5, depending on how aggressive that you may be. Now, it's important to pay yourself first. So I'm not taking a page from the Rich Dad, Poor Dad. I'm just saying it's important to pay yourself first. And when I say pay yourself first, I don't mean pay your bills. I mean put money in your savings account. Put money away for your future, because all you have left is all you have left. When you pay all the bills, when you pay the mortgage first or the rent first, right, you're not paying yourself. When you pay NMAX first, you're not paying yourself. So make sure that you know how much you want to put away and put that money away. Then whatever is left, let your bills cover that. Question, can your salary get paid to no-fee banks, e.g. Tangerine? Is this advisable? I believe that it is possible to use a no-fee bank as your primary bank account. It is not impossible. Those banks are designed to take online transactions and online fees. That's how they work. So is it advisable? As long as that lines up with your goals. If your goal is to save on banking fees, definitely you can do that. So I will say the first thing that you need to do is get onto tangerine.com and see what they have to say about that, because I am not a banking specialist, but I know that that's something that you can actually do.
Somebody's answering that question. Yes, it's possible.
Oh, thank you very much, Augustine.
Yes,
appreciate that response.
I know it's possible. And Tangerine, I believe, is Scotia Bank. So Tangerine used to be if you remember, Indirect, ING Direct.
Yes.
They used to be them, or they got bought over by them or something like that. And I think Scotia bought Indirect. Once again, I'm not telling you to do that. I'm just saying they are becoming safe, or they are safe. I think Tangerine is one of the safe ones, right? I know Tangerine. The point I'm making is do the research. Make sure that the CDIC, I think all those banks have a logo on their websites that says
the purple is not a square, it's a rectangle with circular
logo,
edges.
purple logo, CDIC. And it's CDIC insured. And then yes, make sure, so do the research, understand, and test them out, right? So the point I'm making is test them out, such that if you call their customer service, you don't like them. Sometimes you call some customer service, they're sending you to the Philippines and you don't feel comfortable with speaking to a Filipino in the Philippines about your money. Cut it off. This is your money. Do the research, be comfortable with them, and then go ahead. That's my suggestion to you. Hello, Mary. Hi. Thank you for coming. Nice to see you here. This is my partner in crime from a different life. Thank you so much. Partner in progress from a different life.
Sorry, the cat's out of the bag. So I was going to make one more point before we go further. When it comes to your money, as much as we talk about saving and paying yourself first and all that, one secret to succeeding is taking yourself out of the picture. Make it automatic. So if you know you want to save $20 a month, or you want to save $200 a month, make it a direct transfer from your checking account or wherever the money is to wherever the money needs to go to. As long as it is that way, the likelihood you think about what you can do with that money in Superstore or Costco, like some people I know, is reduced significantly because before that money sits in your bank account, it's gone. It comes in and goes out straight to the savings. I have found out that I have saved more when I've automated, because as far as I'm concerned, that money does not exist, compared to when I have to think about it every month. Oh, should I or should I not? Should I or should I not? If I did, what will I be missing out on? If I don't, it's just a lot of emotional energy. Whereas once you automate it, it's gone. You don't see it. You don't think about it. Boom, you're making the savings, and pretty much that's that. Tayo, what do you think about that? What has been your experience?
I agree. It's when you're trying to save to a certain goal, it's easier when it's automated, because it's you're able to do it better, right? Because once the money is no longer there, then you can't spend it. right? But then again, there's also the discipline of having it automated. And like I used to do, going back to the account where you went to and transferring it right back to the checkings account, right? But I do agree that sometimes when you do certain things, um, it's easy when it's automated in terms of saving, in the bank. Sometimes what I have done in the past is I have had my checkings account in one of the big five, and then I've used one like Tangerine, so that I'm not seeing it and it's growing there for, a targeted saving that I've been trying to do. So if I have a goal, I want to save 5,000, then I know I have a direct withdrawal from my check-ins and say, for example, TD to my Tangerine account, and that has worked for me. But anybody can feel free to share their comments and thoughts with regards to this.
Fantastic. Sasha, I believe that the mortgage will also go out of your online bank account. In fact, some of those online banks offer mortgages. I'm aware that, for example, PC would offer you a checking, a savings account, a credit card, and if you qualify, a very good rate mortgage as well. So some of them actually have they have all the products as well. But if you choose to go outside, they're also well connected within the banking system. So there's no challenge getting money out of a PC account or a Tangerine account to another financial services company to pay your mortgage or credit card, as the case may be.
I know you.
So,
I know you get.
Go ahead.
I know you get more on your savings account in any of those online banks because
Definitely.
they don't have physical space, so they're not paying overhead, and so they have more money to give back to you. So since everything is all online and they're not paying rent and all that stuff, so they're able to give you more. That's some of the things they compete on. That's the strength they compete on. One of the strengths they compete on. Yes.
Fantastic. So far, this has been an interesting conversation. For those of you that do not know me, my name is Dotun Ayodele of Startup Court. I'm a CPA by profession, and I'm here with Tayo El Nathan, and we're talking banking. This is webinar number 4 in a series of 6 webinars that is part of the Way Out of Rat Race project put together by Startup Court. The wind in the sails of this project are Africa Center out in Edmonton and the Calgary Foundation here in the city of Calgary. The Calgary Foundation has been here for more than 50 years supporting philanthropy and informing the people of Calgary, supporting various great causes, the Boys Scout, the Boys and Girls Club of Canada, as well as many other, United Way among others, receive support from the Calgary Foundation. I want to thank them immensely for supporting us getting this project to this point. Now, we have probably roughly another 12, 13 minutes. I want us to spend the next 5 minutes just talking about registered accounts, because registered accounts are accounts that are enshrined in the law of Canada to support you in achieving certain specific endeavors. Number 1 of this is the one that we all like the name, but we all don't know what to do with. It's called the tax-free savings account. Tayo, what do you know about a TFSA?
Oh, other than the name.
Other than the name, tell me.
The tax-free savings account, I personally, so there's a standard definition, but I see it as a step-up savings account, right? So you get your paycheck, the government taxes you, then you have something left, right? Your net income or your net pay, and then you take out of that money and then you save it, you put it in this TF tax-free savings account, and you don't pay taxes on the sorry, I lost my train of thought.
On the returns.
You don't pay taxes on the returns.
You don't pay taxes on the returns, yes.
You don't pay taxes on the return. In terms of filing your taxes, you don't get, it's not like the RRSP where you're able to get a dollar for dollar reduction. So that's why I'm calling it a step up from a savings account. You do get better interest rates, right, with the tax-free savings account. So if the regular savings account is offering you, say, 0.001%, tax-free savings account is probably offering you say 3.75, and I think is this similar to like a term GIC where you're able to have
the beautiful thing about a TFSA is you can either keep the cash or you can invest it in certain vehicles. whether
Yes.
it's blue chip stock or those kind of things. That is definitely a key benefit of the TFSA, because when you do that and you happen to have the kind of run that we had on GameStop earlier this year, whatever those returns are yours to keep. There will be no tax on that.
Mhm.
I'll make sure that you're on that mailing list. I'll take care of that. So the returns are yours to keep, and that's such a beautiful thing. Now, the other thing about your TFSA is that you have a specific room granted to you every year. However, when your investment grows at such a rate that you are able to withdraw more than the room, your withdrawal now creates more room in your TFSA. So let me give you a simple example. You have $5,000 as room in your TFSA. You invest $5,000. Your $5,000 grows to $10,000. You withdraw the $10,000. Guess what? You now have $10,000 as room in your TFSA, not $5,000 anymore, because you've been able to grow it to that point. But everybody else still has only $5,000 because all they have is that year one room. So I think that's the huge benefit of the TFSA that gets lost in translation, because hey, you may not find investments that can generate that kind of return for you, which you will readily be able to put in a TFSA. So that's one. Tayo, we're talking about the RRSP. Do you want to hit that up quickly?
RRSP, registered retirement savings account, is a savings account that you put money in. Now, this one is before taxes, and it's supposed to be for when you retire. It's important to know, because I think I'm jumping, but it's registered is. So wait, I have a question. Now I'm confused. Is registered, does that mean it's guaranteed? Is that what
that just means that it's recognized by the government, and it has a tax purpose.
It has a tax purpose. That's the point. It does have a tax purpose, and you're able to save money in there before your income gets taxed, right? So because it's going towards your retirement, the government will penalize you, or there's a huge penalty if you take money out of that account before, say, your retirement age. And that's really important to know. So they let you put money in the tax-free right before they take taxes off of it, and then you're supposed to grow that income. You're supposed to grow that. Some companies match it. If you work for a corporation, some of them might match it and say they will give you, I don't know, everybody has different matches, but they match it and it's supposed to grow, and you keep watching it grow. Tax time, you get a contribution slip. You take that to whoever does your taxes. You get a dollar for dollar reduction from your income. So, for example, if you've contributed, say, $10,000 into your RRSP, your net income is reduced by $10,000. So you're not taxed on that, right? And if you've withdrawn from your RRSP over the year, you will get a huge penalty, and that's pretty painful, because sometimes you do need to do that. Yeah, and there are different kinds of, I believe, RRSP accounts. You just kind of sort of, every time, I change the job, they will give me this Manulife binder, and you have to read through it and know what kind of growth fund or portfolio you want, aggressive growth, medium growth, that kind of growth and that. So it's important for you to read or to look at it. Did I ever read it it's a whole different conversation. But so yeah, but I think for what I like to emphasize is I've met a lot of people, and especially when we did a tax-free clinic, who did not believe in having an RRSP account. They didn't know what it was for. They didn't understand it. They said, "Oh, my company gave me that book and I didn't read it. So I didn't know what it was, so I was scared." I'm like, why won't you do RRSP? That's the biggest way for you to get a refund back on your tax refund. How do you say that? That's one of the biggest ways to get a refund, but because the government is actually giving you it's not a benefit or a credit.
It's a break, basically.
They're giving you a break.
Hey, don't pay taxes on this money. We'll give it back to you.
Yes, for investing in your future, right? One thing I would say is that there is a contribution room. Everybody has a contribution room or limit. So you have to log into your MyCRE account and look at what your contribution room is. Because if you don't know that, you might over contribute, and then they will penalize you. For example, you have you're making over, I don't know, 200K, 100K. and your contribution will say 18,000, for example, if you put $20,000 there as a way of saving taxes or not paying taxes, you will get penalized by the CRA, because you can't go by your contribution rule. RRSP, the RRSP are pretty cool. They're pretty nifty. I think everybody should do it if you can do it. You don't have to go through your work only. You could also go to the bank and open an RRSP account and have an automated thing from your check-ins, savings into that account, and just save and just let that go there. It's your money. You can't go. It's your money eventually. It's either it's for now or for later. It's your money. So do it.
Tyra, let me add this. Who is not willing to contribute? Are there consequences for anybody who is not willing to contribute? No, there are no consequences. No. It just means that there's no money in your future. That's all.
You might think. So I'm just going to say, when it comes to RRSP, even as little as $25 per paycheck would help you out. So 25, that's still what, 600 a year? You can do a lot with that. That can help you quite a bit. So don't even think any amount is too small, right, to put in your RRSP. Over the next 5 years, over the next 6 years, it's your money. Oh, another thing with RRSP is you can take it if you save it enough. If you're looking for your first time down payment, you can use it for either long-time learning or home buyer's plan. Right, so if you need down payments to buy a house, 20 grand, 15,000, first 5%, and you've over the time contributed into your RRSP, you can call the bank. They'll give you that money penalty free. They'll give you that money penalty free, and then they'll let you give it to the bank for the down payment. And every year on your taxes, they'll tell you how much you are supposed to pay for the next 5 years. So they'll say, and so if you're going to get a refund back anyway, it's just going to reduce your refund. They're not going to take cash actually from you. So RRSP, you can't go wrong. Either you contribute it personally, your work does it for you. How do you open an RRSP? Somebody's asking. You can go to your bank. They can open an RRSP for you. That one you're contributing to. If you start a new job, usually a lot of employers will give you, if you have a benefits plan with the employer, for example, if you're full-time, you're salaried mostly, they will give you a Manulife, Sun Life, and they will tell you this is our contribution, and they'll help you take money from your paycheck before even the money hits your bank account and invest in there. Some of them match, some of them don't match, but if they match, they don't match, still save it, right? $50, $100, 200, it's not too little to save. I really, because when you go do your taxes, also you get a break there. I'm very passionate about this because I came across a lot of people who could have first of all not pay as much taxes or even receive the bigger refund, but they didn't have an RRSP contribution.
Okay, so this is 6:58, and we still have a bit to go to be done.
Oopsie.
So I hope you don't mind us going over maybe like 10 minutes today. I know so far we've had a good record getting done like dead drop 7, but just pardon us 10 extra minutes. I hope it will be worth your while. Now, we've spoken about the RRSP and the TFSA. Lucia, this answer to your second question, no, interest gained on TFSAs are not taxed. It's a tax-free savings account, and whatever return you have on contributions to your TFSA are yours to keep. The government of Canada will not be taxing that at all. Now, we need to talk about the RESP, and that's the Registered Education Savings Plan. None of us here can have an RESP open for us, but we can open them for our children or dependents. Now, typically what will happen is you will be opening an RESP for a child who is under 18 with college in mind. And the way it works is you would make a contribution every year, and the government will match that contribution to the tune of 20%. You cannot contribute up to a maximum of $2,500. So if you contributed $5,000 to your child's RESP in a year, the government will match it only to the tune of 20% of $2,500, which is $500. But when you do the math, by the time your child is 18 and you have contributed that $2,500 faithfully every year, and the government has matched, you are in a 3,000 times 17 situation, which means that without any interest, without any growth, without any capital gains, you will have at least $51,000 to $54,000 sitting in that bank account. That will pay for college education, and that's what the government is trying to achieve. So that's my quick take on the RESP. Question from Sudo: will I get lower taxes if I have RESP and I'm paying off student loan? So the treatment for your student loan is basically the government will give you the break on the interest component of the student loan, not the principal repayment. They will allow you to write off the interest. Now, your RRSPs are a different thing, but the treatment of your RRSPs is the same. If you contribute $10 to your RRSP, the government is going to reduce your net income, your taxable income in this case, by $10, and that's the way that works. So that's that for Registered Education Savings Plan. Now you have the RDSP, which is for people with children with disabilities. So if you have a child that's having challenges with speaking or some kind of physical challenge, you can actually open an RDSP that will allow you to put money away for them, right? Which will support them and support the cost, some of the costs that they will have to bear in their situation, as well as help them to live a better quality of life. That's also a registered account and is recognized by the government of Canada. Now, there are only certain types of investments that you can put in these registered accounts. You can deposit cash in there. You can buy GICs in there, and then you can do mutual funds. You and I know that cash may be king, but holding cash for the sake of cash is never any good because you don't get anything back. GICs, well, I don't think GICs are much different from holding a savings account or cash. So the principal way that most people are able to generate value for themselves in a registered account are through mutual funds or exchange traded funds. Those are the typical ways. Tayo, are you aware of anything else in this space?
No.
Fantastic. So earlier on, we mentioned the fact that it is important to ask your relationship manager questions. Don't keep quiet. We are going to reiterate that again. If you think that you are paying too much in fees, for example, you are paying the fee for the checking account, you don't have overdraft protection, and you're getting hit every month because there's a timing difference between when your pay comes and when your bills go out. You made that mistake time when you landed. You've not been able to correct that. And you have a mortgage in that same bank. You have a line of credit in that same bank. You have a credit card in that same bank. You need to be calling your account officer. There's something called a multi-product rebate. They should be giving you that. You should be getting that. So that's something to look into. But the only way you will know is if you ask questions, right? Personally, for me, when I'm talking about, when I'm discussing taxes with my clients, sometimes clients are like, oh, you know what? I need you to tell me everything. And I'm like, no. Hold up. I can't tell you everything because I don't know what is important to you. So if you look at your situation and you ask me the relevant questions, then we may be able to find the nifty solutions that may solve your problem. But if you you can't tell me the specifics of your situation, then I don't know the solutions that you need. And that's why it's key. Tayo, do you want to answer Sasha's question about Tangerine?
I'm not aware.
Okay.
I'm not aware that the question is, can you open a business account with Tangerine? I'm not aware. I don't know that they do business. I know they do personal and they do high interest savings, but I'm not aware. And I know they do loans too, but I'm not aware for business. But I can do the research, or we can do the research and maybe get back to you.
Fantastic. Now I want to ask a question. How do you keep your bank account safe in these days of cyber crime and cyber security and identity theft? I know people don't think about that anymore because it's like, what, everybody's on the internet, big deal. But what are things that you can do to keep yourself safe and keep your money away from the prying hands of fraudsters and online criminals? Tayo.
Well, I heard the story of Steve Harvey, who was actually going to go to jail. And some of you might have come across that story on social media of how he was going to go to jail because every month his accountants were supposedly cutting a check to pay the IRS, but never paid the IRS actually, and paid himself. And the accountant passed away, and the accountant's assistant called Steve Harvey and said, I'm in this guy's office right now, and I see a bunch of your checks on the floor, not having been cashed, or and that I don't think you've paid taxes for the past 10 years. And everybody knows that an IRS is almost like a god in the US. And we're going to go after Steve Harvey. And at the end of all that, of course, Steve Harvey started working. It came out good for him because if you notice, suddenly Steve Harvey was on TV, he was on radio, he was in church, he was doing 5 shows, and he made all this money because IRS told him he had to pay $500,000 every month to catch up on the back taxes and then pay his current taxes. And that was horrible and all that. And so Steve Harvey goes what he did. And the lesson he learned was that he said he didn't trust anybody with his money. So every morning he said his prayers and he looked into his bank account. He didn't give anybody any power over his bank account. He did it all himself. So he looked at it, he checked it, he made sure. And if anything looked like it was wrong, or if anything looked a bit weird, something didn't balance, something didn't catch, something didn't go out, he went outside and he checked, because he said it's all about you and your money. So my advice to everybody is, this day and age of this and that, every time I get a call on my phone, these people that call me and they tell me, oh yeah, your credit card has a fraud on it. And your credit card has a fraud on it. And I'm like, well, so I called them, actually speak to this people. I'm like, which credit card exactly? So your Visa. I'm like, well, I don't have a Visa, I only have MasterCard. And then they hang up the phone. And then of course I blocked the number. Or the ones that call you from that department that they're coming to arrest you right away. And that actually happened to me. I was on the car driving, it came on the hands-free, and my children were scared. They thought I was going to get arrested because these people called and they told me, we're going to arrest you because your SIN number has been, everybody gets those calls. The point I'm making is, don't give out any information if you don't feel comfortable. Listen to your gut instincts. If you're not comfortable about it, don't give out information. If they're calling you, telling you there's fraud, walk into your bank, ask them, is that truly fraud? Be on point, as much as you can. Open your bank account every day, check to see what transactions are going. If you're doing other flowers for somebody in Utah, then call the bank immediately. If you take money out from the ATM, count it. That has happened where you take money out from the ATM and you're like, oh, it's $500, and they get in your car, it's like, it's $350. I'm like, crap. So count it before you leave the bank so you can tell them if there's a problem. Other than that, the good Lord be with us all. I don't know anything else. I don't know anything else. Internet safety.
I'll add something to that. Keep your personal information private. Nobody needs to know your SIN number, right? Mm-hmm. Unless they need to. The people that need to know your SIN number, fairly infrequently your banker, at least once a year your accountant. Mm-hmm. Maybe when you are talking to the CRA or Service Canada, you need to verify your identity. Apart from those 4 instances, nobody else has any business knowing your SIN number, honestly. So keep your SIN number to yourself. It's your business, it's private. And then nobody needs to have a combination of your SIN number, your date of birth, and your full legal name. Those 3 will take your identity away. So at any given time, in verifying your identity, you don't need more than max 2 of those 3. You don't need to give anybody all 3 at any given time. So let's see. Banking rights and responsibilities. I will just say that when it comes to banking, it's your responsibility to manage your money. You have a responsibility to manage your money. So don't delegate it. Don't expect your account officer to check your bank statement for you. That will not fly. Check your bank statements at least once a month, sign into online banking and just check the transactions, just to be certain that nothing has gone wrong. And then maybe once every 6 months, call your account officer and say, hey, are there any deals? Is there anything I can benefit from? What else can happen for me? I know a number of people that picked up RBC iPads because within their first year of landing, they opened an RBC account. Or when they started their business, they went to RBC and they opened their business bank account there. So being aware of these deals, you be able to see. Some of these devices may be of interest to you. It'll be valued to take advantage of that opportunity. Why wouldn't you want to get a brand new iPad simply for opening a bank account? Come on, it's a no-brainer when we get there. So this is 7:10. Tayo, do you think we've done justice to banking?
I think
I have. That's everything that I have.
I think we've done great. We think everybody has been really nice and listening to us and staying here and listening to us talk. So yes, I think we've done well. I don't want to say any more because it's 11 minutes past 7.
Okay.
We're dangerously close to upsetting people who might want to go.
Yes, so we will stop right here. So Mo, the answer to your question, yes, employer at a new employment, and they will require, because there are forms to fill. So I'm sorry I forgot to mention that, but that is accurate. Your employer at a new employment will need your SIN number. So thank you everyone for choosing to spend the last hour and 10 minutes with us. My name is Dotun Ayodele of Startup Court, and we are here. This is webinar number 4 in a series of 6 webinars that are part of the Way Out of the Rat Race project. This project is brought to you by Startup Court, and the wind in our sails in this case are the Africa Center and the Calgary Foundation. They're the ones that have given us the tools and the capacity and supported us to get all the information that we need to be able to get the word out there. As of today, the recording of the first of our webinars is on the Africa X Media YouTube page. The second one will be going up shortly. You will get an email to tell you to go check it out. The third one will most likely come in the course of the week, and the one for the recording for this one will definitely follow shortly. I want to thank you very much for spending this time with us. Tayo, I want to thank you, Tayo, for being my partner in crime on this. I want to thank Emmanuel Oluwatosin, who is not present, for being the guy that does Startup Court with me. It's been an amazing experience finding people to support us in these causes that seem to be thankless but amazing at the same time. And definitely, I want to thank the Africa Center and Calgary Foundation once again for all the support they've given us to get to this point. With that, I'd like to say thank you to everyone once again, and you do enjoy your evening. Thank you very much, and bye for now.